GameStop, like this whole thing was viewed as a deep value stock. Like that's where everything started. And so
that's where
I think
Doogles always says that value stocks don't perform. And this was up how many percent this week? So you can eat your words, son. Go!
This podcast contains the arguably witty banter of two friends, Skippy and Doogles, that like to debate about investing. The content is intended to be entertaining and for informational purposes only, not investment advice. You should do your own research and consult a financial professional before using any of the information in this podcast, and especially before investing.
All right, dude. Where do you want to start?
I'm in GameStop. So when I think back, there's these major events in life, and you're always like, oh, yeah, I was on the couch doing this, that, right?
Yep.
When people talk back, when we're the most popular podcast of 2025, they're going to be like, so what really started it off? And we're going to be like, we started episode 5 was GameStop, and everyone's going to know what that means. Like, this is a major event. This was one of the most fun market following weeks in the history of my lifetime.
Why?
It's just chaos, man. You don't think that's true?
No, I really enjoyed it. It's just, I asked that question why, because when I've talked to people about it this week, their why seems to be different than mine. And I think, well, everyone seems to have a different why, which is probably why it's fascinating.
Yeah.
But
well,
talk to me about the crazy.
Not to dive straight in, because I know you have a history lesson for us, and I'm really excited about that. I want to get to that. But I don't buy the Main Street versus Wall Street, retail investor versus whatever narrative that everyone seems to have gone to. There is certainly an aspect of that. But I have not even friends, acquaintances that I follow on social media that are changing their name to hold the line F Robinhood, right? And it's like, whoa, dude, you don't know anything about investing. You don't know anything about GameStop, but somehow this is political issue for you. And that is an interesting phenomenon that I think adds to the story, but I don't know that I'm as hardline about that as anything else. And what's so interesting in these issues is I find myself siding with more of the professional investor than I do the retail investor often, which I don't know what that says about me. I don't know if I need to be kicked off the podcast or what, but
so you're saying for this, you side with the hedge funds?
I don't side with the hedge funds, but I see their side as well. It's not unrealistic to look at GameStop's economics and expect the business to go down. That being said, GameStop has been a value investment that I have almost purchased, and several of the ETFs that I follow closely actually held. So Meb Faber's shareholder yield was the top holding ETF of GameStop when this all started. And there's a really good interview with him that we can talk about later. But I understand why you could think that a brick and mortar store that sells video games that you can now download on your PS5 might not have the rosiest future business prospects. And so the Winklevoss twins, how do you say that?
Winklevi.
Winklevi. It's so long that by the time I get to letter 7, I'm just done with their name. Does that make any sense?
It makes perfect sense.
Partly because of their history. There's some tweet from one of them about, I'll pull it up, about how horrible this is, about hedge funds betting against Main Street businesses or something. No, America is not better if GameStop, financial instruments about GameStop are not really driving the future of the company. If it can make profits consistently, it's going to be around and it's going to have a positive future.
All right. So I'm going to take you back for a clip, Snip, because I remember back in, I want to say it was late November, we were in a conversation, right? And I was telling you that I was thinking about shorting the NASDAQ 100.
Yep.
Remember that?
Shorting is dumb. Yep.
I mean, tell me how you really think. So I was telling you about that. And you went on this diatribe. Who knows what was going on visually on your side, but I picture you were throwing that Christmas tree that's behind you.
Yeah, I was.
You went on this diatribe about how you can't bet against America. You're betting against people that are showing up at their office every day, trying to do good, hard American labor. How dare you? How dare you? How dare you? This is what you were saying to me. And now you're saying, you know what? hedge funds. Like, obviously, they could see how this might be something that could fail. Explain yourself.
All right, you're butchering my argument. No, there's part of that that's right though. So if I get to go long short on GameStop, excuse me. Here's what I get on the long side. I get decent fundamentals, and let's talk about GameStop valuation 3 months ago. Like, I get a cheap stock that doesn't have the rosiest future business prospects. They own things. They have people that show up every day and try to make the company better. You follow me?
I'm trying to figure out if I'm following you. Keep going. I'll let you know if I follow or don't follow.
That's what I get on the long side. On the short side, I am betting against all those people, right? Those people that show up every day. I'm saying they're in too deep, and this company is bound to fail. And I don't like that bet. Like, not politically or anything. Like, if the financials tell you that story and you want to make that bet, by all means. That's what I'm saying. Like, I don't hold it against you politically. I don't think you want the people at GameStop to die or fail or be on welfare or whatever. Like, you're allowed to look at that financial picture and say, I don't like the future prospects here. Okay. You're allowed to do that. But I'd much rather be on the long side of that equation, of almost any equation, because if it's just me and you, Doogles, that have a business and people are going to bet against us and we're going to show up every day, that's going to piss me off. And I'm going to work harder, not only because I don't want to be bankrupt, but because I see other people that don't have faith in me and I'm going to prove them wrong. So I would be happy to make them eat crow, but I don't hold it against. It's perfectly fine. If you want to put your money on the line and ultimately, in this case, lose billions, go for it. Like, I'm not mad at you for it.
Fair enough. I hear what you're saying. You're saying as a financial instrument.
Yeah.
Like, fine wrong with it. If you're a hedge fund. Okay. If you're fine, that's fine. Okay. All right. Going back to what you said a little bit ago, I do agree from my vantage point that this is the political aspect of this is product marketing.
Yes.
So there are three things, like my three main takeaways that I have of the GameStop situation. The first we've touched on a little bit in the past, not very surprising, but is the impact of social media on the markets. I think, again, it's not new, right? We talked about Signal a week or two ago, how Elon Musk was tweeting about a product called Signal, communications product, and then there was a stock that shot up like 1,200% in a couple days because of that. Elon Musk this past Tuesday tweeted about Etsy. It went up like 10% pre-market, right? I don't think that's a surprise to anybody. That's social. Social is an impact. I thought there was this interesting tweet from exchange between Josh Ellman and Dave McClure. I don't know if I sent this to you or not.
No.
So Josh Ellman, he was at Greylock. I can't remember if he's still at Greylock, but a venture capitalist. Dave McClure, founder of 500 Startups, a venture capital accelerator for startups. So Josh Ellman says, the whole GameStop situation feels like it will be something we look back on as the beginning of the end or beginning of a whole new chapter. But which? And Dave McClure comes back and says, just the beginning, more to come, amplified and leverage market manipulation at a scale and speed never seen before. That, I think, is incredibly powerful, which feeds into, so that was on social media, but doesn't feed into my first point so much, feeds into my second. And I'd like to sit on this one for a little bit. A second point is the coordination of this. And dare I say, I'd even call it sophisticated coordination of this by retail investors. That is not to say that all of the retail investors involved were sophisticated.
No,
there were a couple people that this was a sophisticated, in my opinion, sophisticated and precise coordination by those individuals to make this happen.
Drop a little more details there before I push back, because I'm not ready to call it sophisticated. I'm ready to call it a school of fish. Like, people react in ways. A lot of people that don't know better get stuck in the herd. And I don't want to talk again, like, politics is my least favorite thing in the world, but a lot of like the mob mentality that comes out in people doesn't mean that the mob was sophisticated.
Oh, I agree. Look, have you go way back in time, early 1990s, actually mid 1990s. I think this was 1994, 1995.
I wasn't born then.
Okay, fair enough. Fair enough. Are you familiar with a classic film called The Lion King?
Yeah, saw it in the theater because was born then.
Yeah,
Go.
exactly. So in The Lion King, there was a character named Scar, right? He was the king's brother. Remember
Yep.
this? Okay.
Yeah.
Scar coordinated this attack on Mufasa, as well as an attack on Simba to get Simba to get out. Right. Well, he first what he wanted to do was to perish him. Let's be honest.
Wait,
However,
did you
to get
did
out.
you pick up a Lion King video game at GameStop this week? Like how how are we talking about the Lion King?
Just it'll come back. Yeah. So anyway, so so Scar, I would say like what's Scar coordinated, right? To get rid of Mufasa, get rid of Simba, make himself king. It was out of jealousy. But that there was a sophisticated plan. To make that plan come to action, he used the hyenas. The
Yeah.
hyenas were not sophisticated, but
No,
the
not at
plan
all.
was. And what I'm saying here is that like when you look at some of these Reddit postings by the like originators of it, they are like precise in when they were saying like we need to get the stock to X. I mean, it's like have you read the posts?
Yeah,
They are
not in the
they're
detail.
precise. My
No,
point is
but
they're
so
precise. And I'm not saying
you're saying a few dudes on Reddit can do some math, like
yeah, no, yes. I'm saying a few dudes on Reddit can do some math, and then they can. And well, when we go through like the history of it, which is kind of was part of my third point, like there had to be external factors like that led into this, but it wasn't just like someone saying go buy a whole bunch of Reddit or sorry, go buy a whole bunch of GameStop. Like it wasn't like that. It was more of we have to get it to this price before close. If we get it there, then these funds
Yep.
need to buy, which will push it to here. I mean, it's like yes, there was math, but you have to have some kind of an understanding of what's happening underlying and what your capability is. That's all I'm saying. I'm not saying it's the most sophisticated plan. I'm just saying it's not the least sophisticated plan because generally, I believe like when we've seen stuff like this from a retail investor, you see this from the institution side, like they'll do things like this. But when we've seen things like this from a retail investors in the past that have pushed up, it's just like it's just a herd, like the herd
Oh
running.
well, yeah.
And this was a buildup.
Okay.
So
Um,
that
I'm
that, that was my
I'm
that's my
excited for
point.
the history lesson because I think, yeah, I'm not trying to push back here. Like, I think this is a more sophisticated than average plan for sure. But the hyenas are the secret sauce, all right? Like,
You need the
um,
hyenas.
yeah. So there's a lot of I don't want to speak ill of them, but there's a lot of non-sophisticated investors that are being taken for a ride, and some people that are going to lose their house, and they don't even know it yet, and that's unfortunate.
Yeah, this is going to end badly.
Oh, it.
Yeah,
I mean, it
it's
probably
gonna
already
end badly.
has for
It's going to
a
end badly.
bunch of
Yeah.
folks.
All right. So I'm gonna wax poetic for a bit. Please interrupt and whatnot because I can get carried away. I'm trying not to. I'm trying to hit some of like the main points because there's so much written about GameStop. I think this week, so people can go off and get all the detail they want. But some of the things that stood out to me that I think are interesting.
Yeah.
And this gets to the third point. You actually hit on this third point earlier, is that GameStop, like this whole thing was viewed as a deep value stock. Like that's where everything started. And so
And that's where
I think
Doogles
is
always says that value stocks don't perform. And this was up what? How many percent this week? So you can eat your words, son.
Yep. And as we just said, all gonna end badly.
Not for me, man.
So yeah, but I do think that combination, the combination of those three, there's the social media, the coordination of retail investors, and then this was a deep value stock. So it wasn't. That's what feels different about this one as well than others. Is like it started off from a good place. And you said you weren't alive for Lion King. Not true. So I know when you went to go see Lion King in 1995 and you were at that mall, you definitely walked past a Babbage's.
I don't know what a Babbage's is.
Say,
is this an East Coast
all
thing?
right, okay.
What's going on here?
I don't know. Are you familiar with Electronics Boutique?
I grew up in a cow field, dude. No,
Okay,
I don't know any
enough.
of these names.
Fair enough. Okay. So for those that you have to be probably 32 or older, most likely to have known this. But so back in 80s, 90s, there was a company called Babbage's. It was a store that was in a lot of malls. It might have been predominantly East Coast. I don't know.
Yeah.
But Babbage's was a place that you could go and buy like used games and video games primarily, was in collectibles and related collectibles. So there was this company called Babbage's, And in the late 90s, Babbage's actually bought the company that we now know as GameStop. So it was like a subsidiary, right?
Okay.
So eventually, so Babbage's was doing really well, bought GameStop. New leadership came in, and it kind of started. It got a little wanton, I would say. And so through the 2000s, started making some acquisitions. And started expanding aggressively in physical stores. So they bought Electronics Boutique. You really should know either Babbage's or Electronics Boutique or both, but that's fair. I don't want to hear your nose
Not
again.
if you grow up in a cow field. I mean, keep going.
That's fair. So they're growing aggressively into physical stores. They bought Spring Mobile. They bought a bunch of AT&T like locations.
Yeah.
Right. So it was just going wild during this time when consoles were actually like coming up. So if you didn't look into the future and only assume that what you were doing at that point in history was going to continue forever, the stuff they were doing made sense, right? And so they started doing pretty well.
Yeah.
Then, as we all know, via like what Netflix did see in the future and GameStop did not, is that maybe you should think about a little bit of digital, but they didn't. So things started not going so well. So GameStop, their stock tanked, right? They still have all this physical property. Still trying to make mountains out of molehills, but they don't even have molehills. Then I'm going to fast forward to what I would say is actually the beginning of what we're talking about happening today, which is March of 2019. Okay. It's the beginning that I'll state. So March of 2019, there was a Redditor, Delaney DI is their handle. And they tweeted, oh, there you go, rein it in. So they posted on Reddit, GameStop investment thesis was the name of the post. Again, in March 2019. And they had their formulas around like equity value, enterprise value, and the sales and EBITDA and all this stuff. And they were saying like, this is not contingent on a turnaround, but I just think this thing is a deep value.
Did you say EBITDA? Because that
eat EBITDA. what you gonna eat? If you're looking at financials, what you gonna eat? You gonna eat a bit.
Like how John Rule would break down the financials. Eat a bit. All right. So let me just I'll jump in here. I love the history. I'm not gonna, but like, yeah, around that time, probably even 2018, 2019, I'm seeing posts in like deep value of like, whoa, this is super cheap. And this is, you made fun of my investment philosophy a bunch and keep going, but this is like the typical, if there is a typical, like the dying retail, absolutely. They get so dirt cheap that you get to the point where you go, gosh, even if they sell off their merchandise, like you probably still make a few pennies, like, so definitely around that time, people are talking about this with what I think is a fairly compelling investment thesis, even though the future business prospects aren't great.
Yep, makes a lot of sense. And it especially makes sense that you would think this was a solid investment thesis, went down by about 70% over the next 18 months.
Hell yeah. So, but to add to that, the reason it was in the shareholder yield fund is because shareholder yield, for those who don't know, is buyback yield plus dividend yield. So it was one of the highest ranked companies in all of the U.S. market based on those two metrics. And those are strong indicators of future performance. So they're giving more money back to their shareholders than almost anyone else during this time. And if you have the ability to buy back shares and pay your dividend consistently, you have cash on hand. You can't do those things if you don't have cash. So yes, I'm happy if it goes down 70% because I'm buying more. And then I make my how many 1,000% return? All right, go.
There you go. I like it. So I'm gonna hit on a few points. As you mentioned, goes up and down. You have opportunities to buy more. So over the next 18 months, it went down by nearly 70%, but it was bouncing up and down, right? Fairly stagnant, but bouncing up and down. During one of those dips was in August of 2019 when Michael Burry bought a 3% stake.
Yes.
So Michael Burry was, if people have seen The Big Short or read The Big Short by Michael Lewis, Michael Burry is like the main character in that, the person that made the very, very large bet against the housing market, right? He took a little break from investing after that and then came back and is now running Scion, a different version of Scion again.
Yes.
So he bought a 3% stake in August 2019 during one of those dips when it was down about 68, 70%. Yes. So that 3% stake he held on to for about a year and then he sold half of it. So in August of 2020, he sold half of it from the public, what I can see, it was about a 40% return. I don't actually know what his deal terms, right, were
Oh
buying
no,
3%.
but that's all that
But
matters. Let's
yeah,
estimate it. Yeah.
so about a 40% return. He sold half. So the point so far, I would say the Reddit thesis hypothesis started in March of 2019. Michael Burry then is known to have bought it in August of that year. Not a lot is necessarily happening with it, but it's kind of, it's doing its thing. It's like it's performing as you'd want like something that you bought in value stock to perform. If you had a 40% return in one of your stocks, awesome, right?
Again, pretty typical. Like that's what you do. That's what I do. I hold for around a year typically, unless something crazy happens. And your good returns are in the 40 to 60% range, and your bad returns are in the minus 20% range, and it all comes out to positive. So
exactly. So then let's ignore the stock market for just a couple bullets, and then we'll get back to it.
okay.
So from then through end of 2020, sales fall like 25%. They close 800 stores over those 2 years. So like the company, for all intents and purposes, is not doing well. They do invest a little bit in digital, but not doing well, right?
Well, and just to take issue with that point, because I've held a lot of these stocks that are like announcing left and right that they're closing these stores. I agree with your premise, but that doesn't always mean that the company is not doing well for the shareholder. A lot of cases are taking out more costs. Like a lot of times that ends up positive for the shareholder if they're smart about how they do it. So
yep, no, that's right. That's right. Now, mind you, during this time, this is still when like the stock ends up being down. So
yeah,
and they're not so like, but I agree. And typically those the bullets I just named, you can't just say that company's not doing well because those things happened. Like that's a big leap. But I'm letting you know the company was not doing well during this time. But then we all know, like over this time period, it was an 8,000% return on the stock. Yeah. So what the heck happened? And most of this, what happened recently, I think, is what's been on the news more so. But I'll just give a couple more pieces of history, and then we can get into the conversation a little more. So April of 2020, there was another Redditor, Senior Hedgehog. I believe it's probably Sonic's dad. I don't know, but I'm guessing it's Sonic's dad.
Definitely.
Comes out with a post, April 2020, and he is saying this is the biggest short squeeze of your entire life. 84% of the shares were shorted, of the float was shorted at that time. He has this final, I love this final all cap sentence that says GameStop is a steal, trading up 20% on the day, and it will be at $10 by month's end, right? So this is like the tiny little snowball that starts the short squeeze like thesis. So the value thesis happened before. This is the short squeeze thesis that he kind of starts it. This was a minor snowball that happened there. So over the next month, it like nearly doubled. But then kind of starts to fall. So it starts to fall, trickles down a bit. August, it's like up 20% roughly since he made that piece. Then comes the big catalyst. What's the big catalyst?
I'm hoping it's Wall Street Bets.
No, that Wall Street Bets is what we've been talking about. No, that's the little trickles so far. So the big catalyst comes when Ryan Cohen, who's the co-founder of Chewy. Chewy is an e-commerce shop. You buy stuff for your pets, basically.
It's like pets.com 20 years later, but it actually makes a few bucks, I think.
Exactly. Stock is up, like it went public in 2019. Stock's up about 3x. It's beaten the market by about that same amount during that time. Ryan, as a side note, Ryan Cohen has been in the investment news over like the past year-ish because he made billions off of Chewy. He left Chewy. Yeah. And put all of his money into two stocks. And that not all of his money, but he put like a sizable chunk of his money into Wells Fargo and Apple. And so that's like, it's like been this like a headline that happens every now and again, but like doesn't really mean anything, but it just comes up. So if people may have seen his name from that. But anyway, so the reason I bring up Chewy is because Ryan Cohen is, because he's been in the news there, among the people that might be on Wall Street Bets, is known as like an e-commerce guy. Like he knows how to do things that were analog and turn them digital is like a general view. I'm just saying,
right.
Well, I'm not saying he's the guy, but so he ends up buying like a $6 million stake in GameStop right through his venture firm. It sends us the shares up 24% that day. And this is the start of like the main catalyst. So then GameStop does end up hitting, as it was predicted, like around $10. At that point, 70% of its shares were short under $7, right? And you start this snowball that happens. And if you look from August, September of last year, that's when things start to go.
Yeah.
By the end of last year, between then and the end of 2020, it's up 400%.
Okay.
So that was the big catalyst. And then came the like, if Ryan Cohen said, "Oh, you think I'm just going to invest? Oh, you think I'm just going to invest?" And that did something for your stock. In January, which is this month, he joins the board. And that is what set fire.
But I mean, so again, I'm not like some market genius over here, but that's what happens when people buy a lot of the stock. Like when you buy a significant portion of the company, you can get on the board. Like that's not a particularly special thing. Like that kind of happens.
Yeah, I know that. So that's not special. I'm I'm dropping this knowledge because I think in many circumstances, like if people are looking at what's going on, going back to your point, they're like there's this political movement between Wall Street and Main Street.
Yeah.
And on Reddit, we're gonna make this political movement happen. And then the stock goes up 400% in a week, which is what happened this past week. And they're like, yes, political movement, we were able to turn the tides here. And I'm saying, go back and look at this snowball. Like this thing, there's so many like little points that were like lighting little firecrackers. And the Ryan Cohen like double pump head fake hit that 3-pointer.
All right,
is ultimately is what allowed the Redditors to make this happen right now.
What's so great about this for Skippy and Doogles is a momentum investor, long-term momentum. I am a value investor. This was a value stock. Michael Blurry and the Chewy guy both made investments here because they thought there was value. I would argue, maybe not the Chewy guy. Maybe the Chewy guy is
definitely
he's going to work wonders with their website, right?
Definitely Burry.
So this is a value stock, and then the hyenas turned it into a momentum stock, and they did product marketing on it and turned it into this fake political thing, and that's hilarious because I think in one of your 3 points about GameStop, you said like, or no, the tweet, the guy was like, this is a brand new game or a new chapter, something like that. I don't think either of those things. I think this has happened all the time with tulips and Amsterdam and every other bubble there is. I think this is just a bubble. And I think it's kind of how things work. When we switch gears, I'm going to talk about more bubbles because the retail investor hyenas right now are out and about, and I had a lot of fun with that this week doing some research.
I look forward to that one. I think so the reason I do think this is different is because of the coordination, which I know you said like is not as sophisticated as I'm making it sound, but I think that is different about this. I do think that makes this different. I don't know if it's a new chapter or not, but I think if my guess is that the SEC actually like does something to try and like rein this in enough, because you don't have to do a lot really, I think, to make this not happen. But that's my belief.
I mean, people aren't allowed to talk to each other. Well, sorry, one more thing. Like, what is it? You know, the most famous bubble. It's tulips in Amsterdam, right? In like the 1400s. Yeah, like
one of them.
We're saying people weren't talking to them, to other people there. No, they were running around the streets being like, "Have you heard about tulips? Oh man, price goes up and it never goes down, and buy some tulips." Like,
but spreading the word is different than telling the masses they have to get to a certain point. Like that's closer to revolution.
Wait, you were on the streets of Amsterdam in the 1400s. You know that some dude wasn't running around being like, "Oh man, when the price gets to 20, holy cow, then you're gonna retire off your tulips." Like those narratives have happened all the time, man.
Okay, all right. I'm not saying people haven't talked to each other. I hear you. People probably talked about the tulip too.
Yeah.
But this is when you put the power of, this is why my 3 takeaways go in there, because when you put the power of social media in, I think those 3 takeaways go together. Because when you say we have the power of social media that can move stocks that exist today, when you say that there's enough sophistication among retail investors that you can coordinate using that social media, and when you have a snowball that already starts because of a separate reason, then you have 2 forces. You have the forces of value investing, the forces of Skippy, and the forces of momentum, the forces of Doogles, that are coming together, mixed with sophisticated coordination and the power of social media. I think that does lead to being able to do this in a different way. And it's also, it wasn't like well, at least look, if I remember back to the 1400s, I'm trying to remember. I don't remember exactly what I was doing, but I remember at that point tulips, but I don't remember roses and sunflowers and all
Yeah.
this other stuff taking off,
Yeah.
right? Just like here you've got AMC and American Airlines, and you've got like Koss.
Oh man,
No, I hear you. I'm just saying that like
the roses just didn't make the history books, but your thesis there is great. But that's a thesis of a changing world. Like social media is doing the same thing to politics, and so what happened in the 2016 election? Facebook, Twitter, everybody else, they tried to make some subtle reforms to make, so there will be something like that. I agree with you. Absolutely.
Yeah. And that's all I'm saying. I think this is the first time that we've seen it at this scale happen like this. And it's to your point with politics, Obama, right, created the machine of social media being able to do this. And then Trump was like, I take your machine and I one up you. Right. With it. Right. I agree. I think that this is, and that's my point. Like, I think this is different for that reason. And what does this mean go forward? To maybe this may close it out or may not. We can keep talking because I talk about this all day. But to your point around like why Burry first got in, his comment that he made a few days ago around this was he tweeted out, if I put GME, which is GameStop's ticker, on your radar and you did well, I'm genuinely happy for you. However, what is going on now, there should be legal and regulatory repercussions. This is unnatural, insane, and dangerous.
Agreed. I mean, I'm generally gonna agree with. Well, that's not true. I follow his investments, kind of, and I don't always agree with them, but I'm generally gonna agree with his thought process there. There's some logic to it for sure.
I mean, I saw you drinking some water, so I bet you bought water. He also bought water.
All right.
Fired up. What's next?
So I did some research this week, and my research was more having fun on Robinhood. This was the most fun I had in at least 2021. Are you familiar with? I think it's pronounced Dog Coin.
Yeah, I think it's Doge.
Oh, it's Doge. It's Doge. So. Okay.
Yeah,
all I know is like the memes are dogs, and so I was like, is it a silent E or whatever?
Yeah. Before you go on, I just want to clarify. So you're on this app called Robinhood, which I think you learned about from TikTok Investors video from last week.
I know. Wait. Okay. So back to GameStop. The people. I get it. There will be lawsuits and Robinhood will pay money, but the people that lost their minds about Robinhood restricting purchases didn't understand that what was more likely happening is Robinhood didn't have cash to cover the positions of people. So we talked about margin debt a couple of weeks back, or maybe last week, right? There's more margin debt to purchase securities now than there ever has been in the history of the world, right? So you mentioned it, right? GameStop, AMC, whatever else. Everything's going to the moon. Yep. This is all, I don't know if this is like Wednesday, Thursday, whatever. This is all you hear about. Like people that don't know about investing are texting me. People I mentioned that are only about politics are like posting on social. Like it's just taking it over. This story is taking over the world. And the freaking Reddit crowd, I don't even think it's the same folks. I think it's like imitation folks, because there's a guy on Twitter called Wall Street Bets now, and if you read his timeline, it says not affiliated with the Reddit Wall Street Bets guy, even though he has the same logo and everything else. So people are ripping, they're ripping it off because they're trying to make money. So how are we saying this?
I think it's Doge, but
Doge.
We okay. Yeah.
Who knows? Like I'm gonna call it Dog because that's way more fun. So it's a penny stock, but it's even worse than a penny stock because there's no company behind it, right? And we have talked about cryptocurrencies and how it's entirely speculation. But I see this gaining steam on social, and everyone's going, so this coin is worth I don't know, a penny, maybe 2 pennies, maybe, right? It's the most tweeted about thing in the world the last couple days, I think, or in the US probably last couple days. Everyone's trying to get it to $1. So I decided to do some market research, right? I bought $100 of the coin. I had something like 2,000 coins in.
I love this.
In 3 hours. I sold half my position and took my $100 back. And so now I have 1,000-ish coins, right? Because the thing went freaking straight up. And
like from what to what? When you say freaking straight up,
I think I bought it 4 cents and sold it 8 cents, right?
Whoa. And same day?
No, in like, I mean, it was 2 hours max. It might have been like 45 minutes.
Same day.
Oh, yeah. Yeah. Because my calculus was, so first of all, this is not an investment at all. This is like worse than a lotto ticket. This is worse than sports gambling. But I wanted to do some research, right? Because I think it's important to understand the human emotions that come with that hysteria, those hyenas, right? And it was thrilling, man. Like it was absolutely fun. And now if Dogecoin goes to 40K, like Bitcoin, 10 years from now, I have a free 1,000 coins.
Yeah,
so
because you're just free rolling at this point. You took out your money, you're free rolling.
Free rolling, yeah.
That's great. And I looked it up. It seems like it's Doge. Seems like Dogecoin.
Doge. So, okay,
we'll see.
But I'm so into this. So I want to talk rational, irrational, because no, I want to talk. I actually want to set this back and try and ground it in personal finance. We can have all our fun, and this was a week of hysteria. I know you and I have talked about lotto ticket stocks before and having a portion of your portfolio to set aside to play with. I think my advice to the average investor, if this is something that was really fascinating to you, it's okay if you don't want to sit on the sidelines. Like if you want to be part of this, that's fine. But I think you have to have clear limits and clear guidelines about what you're going to do. In my case, I was playing around with $100 that I fully expected to lose because I knew I wasn't making an investment per se. I was playing around with the hysteria of the hyenas, right? And I was taking precautions to make sure I didn't become one of those hyenas. Yeah, so I just wanted to talk about that a little bit, right?
Yeah, I think that's critical. I was reading something on CNN about there was like a dad somewhere that makes like $35K a year, and he took the beginning of this even sounds aggressive. He took $4,500 and put it into GameStop, and that $4,500 is now on paper it's over $1 million. It seems like, and he's like, I'm not cashing out. And if you're, I mean, for one, taking 10%, having 10% of your annual salary invested is not a crazy thing by itself. But when you're at $35,000 a year and have a family, 10% of your income is pretty significant to put in not an investment, I would say, which is a speculation and maybe believe it's an investment, or I don't know exactly where his head's at, or believe what you were talking about before, believe the product marketing around this a political movement and feeling it that way as opposed to what it is.
Well, I mean, simple math there. So $1 million is roughly 30 times his current annual salary. Like that's almost retired. You know, basic back of the envelope math is like 25 times your annual income and you can retire, right? Yeah. So like it's obviously not our money, and I'm not here to judge anyone else, but what's so crazy, there's been a bunch of hypotheses about people sitting at home, less sports on TV, driving people to the markets, right? And the crazy thing about the markets, even with something like Robinhood, is like the markets close and you kind of, if you're addicted to checking your social and that addiction turns into addiction to checking your Robinhood, then the markets close. But if you're investing in cryptos, the markets never close, man. It could be 3 a.m. It could be 3 a.m. on a Sunday morning, and you could be like, oh, man, this coin is going to the moon, rocket ship emoji. Like it's crazy. And that is bad for your average investor.
Why do you think it's bad?
Because that desire to check, the more you check, the more unwarranted action happens. So, you know, most of good investing is sitting on your ass, right? That's just how it works.
Yeah, boring.
It's and even talking about the market weekly as we are doing now is probably bad for my investment strategy, because I'd be better off if I was on vacation or whatever else. Like, just the more you think about it, the more you torture yourself into action that's not really warranted.
I think that makes a lot of sense if it's always open. I think I've mentioned this before, but like I check my portfolio frequently. Like every day. I don't check it all the time every day, but I do look at it every day. Because for me, what it does is it helps me to understand the market better, and my better understanding allows me to actually sit still. I don't think that's how the average person works, but that's what it does for me. Because like I know, so by me looking at stocks going up 40% one day and down 60% the next day, or having those types of swings, means that when I see those swings, I don't think that they're rare, and so I can sit back. Like so that's what it does for me.
I may be taking issue with semantics here, but by saying it helps you understand it better implies that the short-term price movements are actually meaningful. And in a lot of cases, I don't feel like they are. So GameStop is the perfect example here. Was it worth $7 2 years ago? And I'm making up that number. I just know it was low. And is it worth $350 now? No, it's not. The true value is not either one of those things, right? So if I check the market every day on that particular security, it doesn't necessarily give me peace of mind. It tells me that there's lunatics out there, hyenas rather.
And that gives me peace of mind.
Okay. Well, then I buy that narrative.
Yeah. I think we're kind of making the same point, because the short-term price fluctuations aren't necessarily meaningful. Sometimes they can be, but generally aren't meaningful. And by me looking at the market more, I realize how often that happens, and therefore I realize that they're not meaningful. And like that's really helpful for me. And so when I know you were talking about some friends that like the bulk of their investments at least are more in real estate than in stocks, because they can't handle those fluctuations. Yeah. And for me, I think if you see those fluctuations as not just a part of a cycle or a short-term fluctuation, then you can say like this is like my portfolio. What if it never comes back? What if it, and by, I've looked at decades of stock returns. I look at things daily. And so like in my head, that's what it helps for me. Other people might not need this, but that's what it helps for me to be like, things fluctuate. Like they fluctuate wildly, right? I have one stock that has since, I think I bought it. This is in my play portfolio, not in my model portfolio. I bought it like last October, and it's gone up. It went up like 100% over the next 3 months, and now it's back down to only up 3%. Right, and I'm just like, all right, because like I know that happens. Yeah. Right. Like news can drive it up, news can drive it down.
No, so my favorite quote relating to that nonsense is basically that's the price of admission. I mean, that crazy volatility. That's the reason stocks on average get you better returns than almost any other investment vehicle over the long term, because a lot of people can't handle that volatility. So, and I am not disagreeing with anything you say, but the way I frame that in my mind is like, we have to find a story to tell to ourselves that helps keep us calm. And I'm not sure that that's always the full truth that you're uncovering there. I think it's your finding the right story to make it make sense to you, which is how humans work. I mean, that's not bad. You're not doing anything wrong. You're being perfectly rational.
I love that. Spitting wisdom on the 1, 2, 3s.
Boom.